Tired of dropping your phone or struggling to prop it up? Meet the PopSockets phone grip with expanding kickstand in black, your new must-have accessory. Don't miss out. Grab yours today. Click the link in the video description to shop now on Amazon.
Welcome to Bitcoin Bulletin, your go-to source for all things cryptocurrency. Today, we're talking about a major shift in investor confidence, and it's not what you might expect. Gold is taking over as the inflation hedge of choice, according to JPMorgan Analysts, who say investor appetite for traditional safe havens like gold is surging amid growing economic uncertainty. That means Bitcoin, which has been touted as digital gold, is losing its luster. The reason? High volatility and an increasing correlation with equities are weakening Bitcoin's long-held status as a reliable store of value. Meanwhile, gold prices have risen sharply this year, with the precious metal now trading above $3,100 per ounce. JPMorgan analysts say this shift in investor confidence is driven by the debasement trade, a strategy focused on acquiring assets like gold and Bitcoin to protect against currency devaluation, inflation, and long-term sovereign debt. But gold is now clearly emerging as the frontrunner in this space. According to data from spot Bitcoin ETFs, there have been consistent outflows over the past 2 months. On the other hand, gold-backed ETFs continue to attract fresh capital. Even futures data is echoing this sentiment. Bitcoin futures have seen a decline in long positions, while gold futures have remained stable. But what does this mean for Bitcoin's future? JPMorgan analysts believe that investors are stepping back from Bitcoin following its strong gains at the end of 2024, and that this reflects sustained demand from both private investors and central banks for gold, not just short-term speculation. In fact, global gold allocations have reached an all-time high, with approximately $9 trillion in gold now held by investors around the world. That's about 3.5% of the world's total financial assets. And it looks like JPMorgan has some predictions for Bitcoin's fundamental support levels, currently trading near $83,700, but potentially closer to its production cost of around $62,000 and a volatility-adjusted valuation around $71,000. So what's next for Bitcoin? Will gold continue to gain momentum as the preferred inflation hedge, or will investors come back to Bitcoin? Only time will tell. But one thing is clear. This shift in investor confidence is having a major impact on the cryptocurrency market, and we'll be keeping a close eye on it here at Bitcoin Bulletin. Stay ahead of the curve with insights and alerts from analyst ratings, free reports, and breaking news that affects the stocks you care about.